After doing mortgages for over 5 years, I've realized that there's only 4 things that hold most home buyers back, or future potential home buyers back. Only 4. Now, yes, depending on your circumstances, there might be a little uniqueness, but these are the 4 major ones that I've noticed. My name is Marcelle, and I help blue collar workers buy a home. I help them get approved for that mortgage instead of getting denied. Number 1, you must have 20% down to buy a house. I can't tell you how many clients the first conversation is, hey Malcolm, I can't buy a house because I don't have 20% saved. And then my rebuttal is, I don't have 20% either, and I still bought multiple houses. They're like, wait, what? I was like, yeah, you can go as low as 3% down. Yep, you heard it here. 1, 2, 3, 3% down. Don't need 20%. This was started in this myth, and the reason why it was passed down was because your parents didn't want to pay what's called PMI, private mortgage insurance. And that's a fancy way of saying money that the bank collects to protect them in case you ever default on the loan. So this fund was gathered and protected every time you pay. But if you do FHA, it could come upfront PMI, which is now a percentage that you're paying at closing on top of the money you're paying them every month, right? So to avoid this, your family or your great grandfather or whatever passes down, don't buy a house unless you have 20% down. Don't buy a house unless you have 20% down, because they was trying to avoid this. The issue though is houses back then were nowhere near as expensive as the houses today. So 20% down of, we're going to use a simple number of a $300,000 house is $60,000. And that's just the down payment. You still have another 5 to 6%, depending on where you're buying, on closing costs. So that amount is higher than what they had back then in the days. So it got passed down, avoid PMI. My counter argument is, okay, let's say you wait, you stack up your money, you save for that 20% down plus the closing costs. Let's just say you have 25% saved of that $300 house now, right? But it's going to take you, or it took you, an additional 2 to 5 years. That same $300,000 house now is not $300,000. As you know, real estate tends to go up. On average, it can go anywhere from 5% to 15%, depending on your market. Some markets go up even higher than that. The appreciation is like this. Now that $300,000 house is now $350,000. So what does that mean? You don't have 20% anymore. So now you're going back to the drawing board, trying to save up more money, and the cycle repeats itself. While I personally think it's better to put down what you're comfortable putting down. If you could put down 5% comfortably, put down 5. If you could put down 3.5% comfortably with FHA, put down that. If you could go 3% conventional, put down that. It's what you're comfortable doing. But one thing you got to realize is that the money you are borrowing is at the cheapest rate you can get. Because even if you take out a personal loan, you're not getting the same interest rates as a mortgage. No, they're higher. If you go to your credit card, look at them rates. Look at that APR rate. It's even higher than the rate of the credit card. We get too laser focused on one thing. I must have 20% down. I'm avoiding this, but you're not looking at the big picture. That's myth number 1. Now, myth number 2, I cannot buy a house unless I have perfect credit score. Not true again. You know how many people I've personally helped? When we look at that credit score, we're like, whoa. And guess what? We can still get it done. See, with FHA, you can go as low as a 500 on the credit score. 500. So if you have a 520, guess what? Technically, you can buy. If you have a 510, technically, you can buy. Yes, your rates aren't going to be the best. I'm not going to lie to you. The rates get better as your credit score gets higher. So if you're at a 500 versus a 580, 580 is going to have a better credit score. If you had a 580 and you're versus a 700 is going to have a credit score, therefore. So the idea that you need perfect credit is not true. It started because people wanted a better rate. So they say, oh, you have to have perfect credit. You have to have perfect credit to buy, but you don't need perfect credit. Now, disclaimer, if you have a 500 credit score, do not think you're going to put down 3.5% down. No, you have to put down 10%. Because your credit score is not as immaculate, you have to put down more. But that's only up until you hit 580. Once you hit 580, that's the threshold. 3.5 is allowed again. So from 500 to 579, that's 10%. Once you hit that 580 and up, 3.5, baby. So you can do things to fix your credit now, especially if you know that, hey, you know what? My score might be like 400 and it is okay. You know how I know that? Because I've personally, my first client, her credit score was in the 400s. I connected her to one of my credit repair specialists. Boom, boom, boom. 6 months later, 580, 595, something around there. Boom, 3.5. Use that to buy a multifamily. 3.5% down and use that money to buy a multifamily house. Her first try. So don't think that everything has to be copacetic and everything has to be perfect for you to buy. No, it is okay. And when you work with a real loan officer, a loan officer who really wants you to win and succeed, we will take the time and break down, go through the process with you and do a roadmap, a home buyer roadmap on how to purchase the house, what things you're going to have to do. These are the potential roadblocks that we see an issue with. Let's work on it, blah, blah, blah. I do it all the time. I have a new client who's buying a house, 1099. He's his own boss. What we're doing, we're looking at his tax returns. We're like, okay, this is what you claimed. This is the stuff that you need to do. You need to, make sure you start claiming your full income, because a lot of 1099, we know you guys don't always like claiming the cash that you receive, especially your tips. But when you're buying a house, you can't do that. That works against you. So these are the advice that we give as loan officers. Obviously, I'm not a tax accountant, so I can't tell you how to file your taxes. I don't do all that. No, your tax accountant will. I will just let you know that, hey, based off the number that you're giving me, this is what you're approved for. If you want to be approved for more and you know you have more money, claim it. It is okay. Let the IRS see what you're bringing in. It is fine. This is how you get approved. Like, you look at the bigger picture sometimes, and we get too stuck in, oh, I don't want to show them all my money. If you don't show them how much you're making, who's going to give you money to purchase a house? All right. That's another story. That's another video. I'm going to stop it there. All right. Number 3. This one is good. All right. Recap. 20% down. Myth. Right? Perfect credit. A myth. Number 3. Drum roll, please. Boom. It is easier to rent than to buy. It is cheaper to rent than to buy. These are the myths. I put them side by side because I hear both of them. And the reason why I think people believe it's easier to rent is because it's less paperwork. But when you think about it, look, this is what happens when you do a rental. Obviously, I'm not a realtor. I'm just going off what I know about renting from my own tenants. We give you a link. You put in your social, right? We check your credit score. We're going to look at your income. We're going to call either your employers or your references. Then we're going to look at how much debt to income ratio you have. Yes, this is the rent process, because we got to make sure that, hey, you have more than ample enough based off your salary to pay the rent that's going on. And you remember, when you're paying rent, you have the ability to lock in for a certain time period. Most of my tenants, we do 2 years, 1 to 2 years leases. After those 2 years, guess what? The rent price goes up, right? We're still going. If you don't have enough, or if your score isn't high enough, we could ask for a cosigner, right? Does this sound familiar? Because to me, it sounds like it's very similar to the mortgage process. You have to pay your first rent, your first month and last month. And if there's a broker fee, right? Because you got to pay the real estate agent who's helping you. These are all the things that go into paying rent. So yes, The initial process is very similar to getting a mortgage. The only difference is the amount of money is less. But like I said, if you're putting down 3.5% and you have 5% saved, maybe you're like, wait, hold on, I got enough money now to buy a house. And if the process is saying cosign and credit, given my pay stubs, same thing as getting a mortgage, is it really easier? Might happen a little quicker. That I'll give it to you. But easier? And cheaper, yes, it's cheaper up front. But in the long run, if you've been there 5-10 years, holy smokes, you're paying 3-4 grand for 12 months. Times that by 10. That is the price of a house at this point. You're buying a house and you have nothing to show for it, because at the end of the day, you didn't build up any equity. Nope. You didn't build up no appreciation. You didn't get to claim the depreciation on the taxes. You like that? Appreciation, depreciation. You didn't get any of that. None of those benefits went to you. They all went to the homeowner. So it's not always easier. All right. It's easy up front, but in the long run, it's costing you way more in the back. So think about it. This myth is another myth that just got passed down. All right. Last one. This is my favorite one. Honestly, I think it's fair. I don't know how many people agree with me, but personally, it's a lot of fear. You're nervous, you're scared, you're wondering, can I really do this? Am I worth getting a house? Am I worthy enough? I'm gonna be the first person in my generation and my family. No one else has done this. No one has helped me. I don't know what to do. Fear. This is all fair, because there's videos like this one that I'm making, and other YouTubers, other mortgage people make their own videos. There's books, not always the best books. Don't worry, we're gonna work on that. We're gonna change that. But there are some books out there that talk about the home buying process, and we're just fearful. I believe personally that is what holds us back even more than anything. The fear of the unknown scares us completely. And buying a house is very fearful. It's your first time. It's your biggest purchase that you'll probably make in your life. True story though. Most people end up buying 3 houses in their lifetime. So after you get over the first one, it's easier, but the law's always changing. So it's like, wait, I didn't do that the first time, but you might have not bought in 10 years. So obviously some things are going to change, but at least it's a little easier. It's always harder to go over the first hump. The other one's like, okay, it's a little something, but I know I can do this at the end of the day because I did it before. You know, you have that past knowledge. So that's what pushes me in this business, and pushes me to help you guys, because I want to take as much fear away from you as I can and just say, hey, let's go over the home buying process. Let's do the roadmap and let's help you and show you, hey, you can buy a house too. You can become a homeowner. Whew. All right. That's all I got for you guys today. I hope you enjoy it. I know I cut it off like in the midway, and I'm sorry. I was about to go into another subject and I'm like, wait, hold on. That'll be another good video. And I don't want to make this video any longer. So I hope you understand. I appreciate you guys for watching. Thank you for staying with me as I grow this channel. I'm trying to make it more personable. So let me know. Let me know what changes you guys want to see, and we'll keep going. We'll keep growing together. All right. I appreciate you guys. Hustle family. Over and out.